Wow, I don't know what it was, but today Jerome Powell just seemed extremely frustrated. It felt almost like he was presenting a lie. Now, there could be two reasons for why he would be presenting a lie. I'm going to talk about that. We'll talk about the punch card, and we'll talk about some of the other important things that were said, including, are we getting a rate cut this year? Hint, no. So, first, why did he seem frustrated? My expectation was he seemed frustrated because there are two explanations, and I'll tell you which one I think he would lean towards. One, maybe he wanted to hike rates. We got a pause today. Maybe he wanted to hike and he was frustrated that he had to pause. Remember, this was a unanimous decision. That's one possibility. The other possibility was that he wanted to pause and he wanted to be done. Remember what he told us in the prior two meetings. He told us that we are at restrictive levels of rates. Today, we signaled a pause, and it almost felt like he had a script. In fact, at one point, he screwed up his script. That was actually quite interesting if you caught it. I'll redo it for you. Basically, he says, hey, a skip gives us a full quarter of data. Oh, the skip. I shouldn't call it a skip. The pause. Because skip implies a future rate hike, right? So there are two ways to look at it. Either he personally wants to hike today, and he was frustrated with the questions and frustrated with markets because he wanted to hike, and he got a pause. I don't believe that, because I actually think other members of the Fed are more hawkish than he is. I think he's the dove. I think he actually wanted to signal that this was it, that rates were restrictive. But the higher powers that be were whispering in his ear, were holding a gun to his head saying, you need to talk this market down. You need to lie to this market and tell them that things are out of control, that core PCE is rising again, and this is a problem. Look at it on a 6-month chart, for example. I'll pull that up in just a moment here so you can see it. In fact, actually, here it is on screen now. So the 6-month is bobbing up again. There's that little bob up right there. If you look in the middle of the screen here, this sort of moderate blue level, oh, it's bobbing up again. This isn't falling as quickly as we want. Jerome Powell, tell the world that that's why we're all going to end up having rates go up more. Now, what we did is we had a challenge. We had what I call a 4 punch card challenge to evaluate Jerome Powell today. And the 4 punch cards were, 3 of the 4 were answered. One of them was somewhat answered. 3 of the 4 were answered. So here's what our punch card was, okay? And I'll give you the punch card. Oh, let me quickly also finish the thought that with his frustration, just to prove his frustrations to you, if you remember how he acted, his answers were, hey, are there lags? I don't know. Credit tightening? I don't know. Restrictive policy? What level is that? I don't know. Last month, he was pretty dang confident what restrictive was. In fact, he gave us the formula for what restrictive was. Now it's I don't know. Inflation high? I don't know. It's trending a little high. We don't want core to be above 4%. It's too high. Wages going down? I don't know. They might be going down, but I don't know. The whole thing felt really like, rather than him telling us how he truly felt, it felt like he was putting on an act for us. And so I think we can somewhat evaluate his act by considering the 4 punch card that we came up with, the 4-hole punch card. So you ready for this? Number 1, the punch card number 1 that we wrote down was, is he going to distance himself from the dot plot? That was actually a really big deal, the dot plot, because the dot plot came in a lot hotter than we expected. To remind you what the dot plot said, in case you didn't see it live, take a look at this. We were looking at a 5.1 for a Fed hike, we were looking at 5.1 was the last max terminal rate. We were looking for a 5.3 or a 5.4. We got 5.6. That implies 2 more rate hikes. That's not great. We did expect GDP to increase and unemployment to decrease. We got those. We matched my expectation of 4.1% for 2023 unemployment. And we beat my expectation and the previous estimates of real GDP. The recession has basically been priced out. In fact, if you look at the range of estimates here, the negative estimates for a recession are gone. We're not pricing in that recession anymore. However, this 5.6, I think, came as a shock to Jerome Powell. And so one of the punch cards that we wrote down was the following. We said, will Jerome Powell distance himself from the dot plot? And guess what? He did, because I think that number is hawkish. And I think because that number is hawkish, he's saying, hey, you know what? We are going to have to unfortunately recognize that, hey, Maybe for some reason markets need to price in a little bit of a higher rate. Yeah, let's talk the market down. Let's go with that SEP. But I don't buy it. I don't buy it one bit. And I don't think Jerome Powell buys it either. And I think that's why he was coming across as sounding like a lie. So what did he say? Well, he said the following. Well, I can't really talk about the SEP. The other members of the board, here it is. Listen to this quote, they sit around the country in their different offices. They send in their forecast on Friday, and then we submit it. That's what the summary of economic projections is. He did not have to say that. He literally distanced himself from that dot plot as far as you possibly could. He's like, hey, look, that dot plot, man, that doesn't represent my opinion at all. People sit around the country and that's what they send in. Jack, I know they're saying, just give him a thumbs up, okay? I gotta concentrate, sir. So the second part of the punch card was that are rates restrictive? And we were trying to evaluate, are rates restrictive? And so Steve Leisman actually answered the question, or asked the right question. He asked, hey, so are we restrictive? Like, this is a very confusing SEP. Again, why Jerome Powell was distancing himself from the SEP, in my opinion, and why it sounded like he was coming across as lying, because I don't think he believes this SEP. I think there's no way in HE double hockey sticks he thinks 2 more rate hikes are here. I could be wrong, but I think that's why he was so frustrated. So when it comes to the restrictive question, he stated that, look, we're much closer to sufficiently restrictive. I think that's sufficiently restrictive is where the risks of over and underdoing it are closer in balance. And we do have risks of inflation going to the upside, but the reality is we need more data. And that's the more data part is what we have to talk about, because we have to talk about when would the Fed likely raise rates again. I just quickly want to remind you, link down below, you have courses on building your wealth. Prices will be going up on Friday, June 16th for phase 1 of a 4-part price increase cycle. The reason we're raising these prices is because we're adding a ton more content to various courses here. We're bringing AI to the real estate investing and stocks and psychology and money group, and adding more to the productivity group. These are the courses on screen now. See them all linked down below. And I'm using banners now just to simplify the pitch to keep it shorter for you. So continuing, the third thing that we talked about was that, is recession still a base case scenario? Previously, he suggested it could be. And here he didn't really give us an answer. In fact, he somewhat implied that a strong labor market that gradually cools could keep us out of recession. He didn't really answer this one directly. I think the summary of economic projections did, but I think it's a little rich to say on one hand, don't look at the summary of economic projections, on the other hand, say do look at it. So I'm going to say he didn't answer that one. The fourth one he did answer, which is that, yes, wage inflation is gradually trending down. To be consistent with 2% inflation, we need 3% wage increases. 3% wage increases at about 70% for consumers brings you to about 2% for inflation for CPI. It's roughly the background math. Don't worry about it. The point is, he acknowledged that, yes, wages are moving into a more balanced environment. No wage price spiral. No wage price spiral means no Paul Volcker. The really bad potential of this market is not here. And I think that's why, even though markets initially moved down, they're already rallying into the close. Nvidia, for example, is at 425. It went down to 416 during the press conference. Now it's rallying into the close. That could be nuts. But anyway, Intel's moving up at about the similar level, and I'm really bullish on Intel. Forget that for a moment. We don't need to talk about my stocks. I talk about that in different videos. But what I really want you to focus on is that if you want to see this webcam, which accidentally showed my pants or lack thereof during the live stream, make sure you check out metkevin.com/webcam. It's a paid promotion on the channel, metkevin.com/webcam. It's a great device. Really love it. Just make sure you turn off that face tracker when you don't want it. Anyway, okay, so those are the 4 punch cards. Now I'm going to talk about some of the other details that he talked about, but I want to recap some of those 4 punch cards really quickly. I believe, and this is my opinion, make your own opinion. We ran a poll as well. The poll said that out of 5,000 votes, 53% of you thought this was a bullish meeting, 47% of you thought it was bearish. So basically, that's a 50-50 right there, right? So no real clarity on the poll results. But what does Kevin think? Remember, you come here, in my opinion, to get my perspective. I try to give you the non-biased facts and information, and then I want to give you my opinion. So my opinion is Jerome Powell was lying through his teeth that this market is actually going to give us 2 more rate hikes. I think he was lying through his teeth because he had to. He had to send the unanimous message of what the chair want or the entire board wanted. I think the board said, listen, Powell, we will give you that pause that you want, but only if you talk this market down, make this market stop rallying, make sure you tell them that inflation is surprising to the upside. You know what? Here, you need a piece of data? Look, what's one piece of data that's slightly negative? Oh, don't look at the 6-month change for PC inflation. Don't look at the 12-month change. Use the 6-month, because that's the one that went slightly hot. So talk about how it's going up again and how there's more work to do, and talk about how, you know what? Even though you said rates are restrictive, now we don't know if they're restrictive anymore. And even though we're not looking at a recession anymore, that just means we have more work to do on inflation. And I think that's why he was acting like a fussy jerk during this press conference. He wasn't his dovish usual self. But you know what? There's actually something else that was different about Powell and the statement and his behavior in the press conference. So his behavior in the press conference and the questions, I think, was shaped by the board. But you know what he wrote? There's something that he wrote and he has full responsibility of. And you know what that is? It was the opening statement. And the opening statement was not hawkish. The opening statement was dovish. The FOMC statement was not hawkish. It was neutral. We didn't really get a hawkish pause from Powell. We got a pause from Powell and a hawking board. That's what we got this meeting. So, what else did we hear? Well, first, we heard that Jerome Powell suggested they've made no decisions on future meetings. They're at a point now where they're not planning on hiking every meeting, but that they haven't made decisions on future meetings. They really want a full quarter of data, whether he was referring to May, June, July, or he's referring to, please hold on a second, or he's referring to September. I personally think, much like what we saw this morning, the market is starting to price in that the terminal Fed funds rate might actually come in September, not in July. So I think you could get 2 pauses. You get a June pause, you get a July pause, no meeting in August. And maybe if you need to, you hike one more time in September. But this 2 more hikes, I don't see it unless the data really started getting dark. If the data went dark, we'll adjust, we'll flip-flop. But right now the data is saying stay paused, maybe one more hike. The fact that this SEP suggested 2 more hikes, I think pisses Jerome Powell off. I think he's going home, he's going to ride his bike home, and then he's going to drink a 5th of vodka. That's what I think. I think he's pissed. Yeah, that's a good one, isn't it? Okay, so then we have GDP, obviously stronger, away from recession. That's great. Inflation takes time. There's a lag, a lot of uncertainty, speed of tightening, level of tightening, how long to stay there. We're at the how long to stay there part. Are we going to target housing with more increases? Well, no, we're looking at the broader economy. Commercial real estate, we expect some losses. Oh, this was a good one. Most of the FUDsters are using commercial real estate as a way to say, this market is going to crap. Jerome Powell actually gave us bullishness here. You want to hear what he said? He said, I think the commercial real estate problem will be, quote, around for some time versus some kind of sudden black swan event that essentially crashes the market, right? So will be around for some time versus sudden. That was his line. That's a very big deal. Very big deal. So this is just sort of a gradual decline. Regarding the reverse repos, he acknowledged that the reversal repo facility actually started falling. It started falling, the balance, because the TGA is filling up the Treasury General account. There's plenty of liquidity in the system. The bears are like, but Kevin, China's slowing down. There's a liquidity problem. The Treasury General account needs to be filled back up. PCE, core PCE is running too hot, and we're going to have a wage price spiral. All of these things are crap, and commercial real estate is going to blow up. All of this is crap. None of that, like all of those descriptors, are a great explanation for why we have 5% interest rates. But are they a reason to say the market needs to plummet even further? Absolutely not. Absolutely not. So on the final note here, what do we have? We have hiring rates. Yes, they wait on hiring. It'll take some time to evaluate. Inflation expectations are still anchored. Okay, so in summary, no rate cut this year. Absolutely inappropriate, says Jerome Powell. He basically lied through his teeth because the board twisted his arm into acting hawkish, but he is not hawkish. He is not hawkish because he is evidencing that he is not hawkish by his opening statement and the fact that he distanced himself from the summary of economic projections, the furthest I've ever seen him distance himself from that SEP, suggesting, people sit around in their offices around the country and then they submit it in. He really distanced himself from the SEP. So I think Powell is on par for pause wait until September and maybe keep the pause. If some of these inflation numbers start coming in hot, fine, give us another single hike. But this talk about 2 is going to be something that the hawks are going to pick up on without evidence, and I think they're going to be wrong, unless obviously the data comes in harsh. Remember, I mentioned earlier in this live stream that Elon Musk sees deflation coming. Elon's been a pretty decent leading indicator of, hey, inflation's going to plummet. Hey, deflation is coming. Although he might just be a little bit early, and really is the Fed solely paying attention to Elon Musk? No, absolutely not. So that's what you have. Again, if you want to learn about my courses, go to the links down below. Big price increases coming. The next one is in 2 days, in just 48 hours from now. Email us at staff@meetkevin.com if you have questions. I brought this live stream to you with StreamYard and recorded it with StreamYard. Go to metkevin.com/StreamYard, a paid promotion to learn more about that. You want to see the webcam that accidentally created a crotch shot for Kevin during the live stream, go to metkevin.com/webcam is a free promotion. And if you want to see the software I used to throw up the ticker screen during our live stream, that is Webull. Go to metkevin.com/free, sign up and get yourself 12 free stocks. And with that said, we will see you in the next one. Thank you so very much for being here. Appreciate all of you. Even if you're not a course member yet, I have faith that one day you'll join us there, and I still love you regardless. Hopefully you appreciate all the fundamental analysis we do have in the course member live streams, and folks, we'll see you soon. Thank you so much. Goodbye.